I have the 13 best price action and momentum trading tips. They will completely transform the way you look at charts and help you to become a profitable trader much quicker. So welcome back and hello to a new video. Thank you once again for all the great support, and please keep commenting, please keep liking my videos, make sure to subscribe to my channel, and this is all very appreciated. Every like, every comment, every share really helps, so thank you once again and thank you for this great support. And now let's get into a special video. I know you all love price action videos, so here is a new price action video with new concepts, new tips on how to understand pretty much any price action scenario. And the first one is the concept of deceleration and acceleration together with the spike. And we can often find this high probability scenario across all the time frames, across all the markets. So once the market has given us a previous resistance area, a previous high of a trending market, we wait for the market to come back into the level, and then very often we can see this sequence here. We see first acceleration, which means that the bullish candles get larger and larger before the concept of deceleration comes in. The candles get smaller and smaller, and then you have this spike signal here. The market takes out the previous highs. A lot of people will have their stops above the previous high for the people who are still short. A lot of people who want to be breakout traders will have their pending buy orders above the resistance level. So this is the spike signal is targeting both of those traders at the same time. The breakouts will get triggered and then immediately reversed. The people who are already short but use a tight stop loss, they will get taken out of their trades, and then the market moves without them. And if we are not short yet, this is a great signal here where we see multiple things coming together. We see deceleration, which means that the momentum is slowly dying down. The bulls are not as strong anymore. We have a huge spike signal, which is also here an outside candle. This bearish candle engulfs the past 1, 2, 3, 4 candles here. Very strong signal. And then you have acceleration away from the level. So after the candles got smaller, now the candles are getting larger, and this is then initiating this new downtrending phase. And you can see once we put everything into context and once we really allow the price action and the candles to tell us a story about what is happening between the bulls and the bears, how are people positioning their trades, where do they have their pending and limit orders, then we can look at charts in a very different way. And it's just the first example. Let's move on to the next one. And here I have the concept of the momentum rollover. We can very often see such a behavior in the markets. And the market and the price action starts with an uptrend. So from here to here, the market rises steadily. And then something is happening here at the top, whereas previously you have seen a bunch of mostly large candles or larger candles. And the candles, they have varying sizes. Mostly they are quite large. And then here, as the market moves into the previous high point and the previous end of the trending market, seems like the candles are getting smaller and smaller. This shows that the participants are losing interest. The buyers are not as strong anymore, but the sellers are also not coming in yet. So they are just neutralizing each other. And this means that there is likely no trend continuation happening, because for a trend, you need to have one side of the market participants much stronger than the other, so they can absorb the price action and then push the price to a new high or to a new low. But here, this is a momentum rollover after a strong trending market. The buyers and the sellers neutralize each other. There's no momentum left anymore, so which means that the uptrend continuation is very unlikely. But as soon as the market shows us here that the market is breaking below the previous lows, so we have a support level in here, we can see that now the momentum seems to be picking up to the downside. You can see, even if you missed the first breakout at this level, you can see that the candles are now getting larger. So during this sideways phase, we have never seen any large bearish candles, but suddenly here, post breakout, we now see that the bearish candles are getting larger, the bulls are getting smaller, and the ratio is really shifting. And then you can see the market afterwards really collapsed. And the collapse was preceded and was kind of foreshadowed by what is happening here. Large candles, good strong trend, to then no or small candles, consolidation, a lot of uncertainty, and then here large candles once again for the bearish side, and then the market really collapses. So it really pays off to understand and to analyze candle size, the ratio, and how are those things developing over time. We have here two very interesting concepts at play. And the first one is here the trend structure. So during this past downtrend, you see that the market always made lower highs and lower lows, lower highs and lower lows. That is how trends are defined, and that's how the trends move. But here at the bottom, something is changing. The market made a significant spike here, which looked probably like a continuation to the downside, but the next candle shows a huge bullish candle. And just looking at this previous uptrend, previous downtrend, except for this candle here, there was never a really large bullish candlestick. And this is as a first heads up, because it shows that suddenly the sellers are not as strong anymore, and the buyers are able to push the price higher and are really able to make a move here in the market. So that's your first heads up, and after this big bullish candle, the market just went sideways. The momentum died down, the bulls are not ready to take over yet, but the bears don't have the power anymore that they used to have during this downtrend. You can see during this downtrend there were always large bearish candles, but here suddenly this is changing. And then here at the bottom you see we have now higher lows as well. We're not even coming close to the previous low, so there's a lot of pressure building up. And then you have your first breakout here, leads to a new bullish attempt. Not a very strong bullish run, but the market does make higher highs and higher lows until this point. Here the market now is making a double top, which is not a strong bullish signal anymore. So you may have used the breakout here to get a little bit of profit out of this market. But as soon as the market gives you here this double top here with a spike and a failed breakout attempt to the upside, you should really start being more cautious, because this may signal that the buyers don't actually have the strength that they seem to have here previously. At the same time, the market is establishing here this trend line. So this looks like a wedge pattern, or maybe like a triangle. And overall, if we take everything into context, we can see that a very strong downtrend was here. Then the bulls tried to take over. It looked good in the beginning, but then the bulls lost power, and the bears are gaining more and more strength here. And they are ready to take over. The market is not able to push higher. Here, after the failed breakout and after the double top, the market is really sticking to this trend line. And then finally, the trend line was broken and the market resumed its downtrend. So you can see the overall, the market was in a downtrending scenario. Here was the attempt of the bulls to make a change in the trend, but the trend change was immediately rejected and the sellers took over. Here we have another deceleration and acceleration at play, and I think those are one of the most interesting and one of the most helpful scenarios and situations that you can try to master in your own trading. So the market was in a short-term uptrend, and first of all, during the uptrend here you can see that we have large bullish candles here, but something is changing here. First of all, the size is completely changing. No more large bullish candles, and if you see something like that, this should already be a heads up. Not necessarily when you see just one small candle, but if you see then afterwards there's no follow through and there's no more bullish strength coming. You have multiple wicks here that always show the attempt to try to push the price higher, but the attempt every time gets rejected. And then you can see after those 3 rejections, you suddenly have a strong bearish candle, which we haven't seen during this downtrend or during this trending market, probably the last time here. And then afterwards, after this large bearish candle, you suddenly have a bullish candle, maybe a last attempt of the bulls to try to change something, but the next candle is an outside bar, and not just a regular outside bar, a very, very strong bearish outside bar. So now we can put everything into context. And now the price really tells us a great story. We have here acceleration first, strong candles, then we have deceleration, small candles, we have a lot of spikes, and then suddenly we have larger bearish candles, and we have an engulfing candle. So everything is really showing us this gradual turnover of price action. First the bulls are on control, then they are neutralizing each other, bulls and bears, and then the bears are taking control. And then afterwards the market really dumped or dipped down, and everything was indicated already by this slow rollover. I am a very big fan of trend analysis, and in my own trading I do a lot of trend and momentum analysis. And when you are in an overall downtrend, so probably if you use a long-term moving average, here you will see that the market is in a long-term downtrend. In a long-term downtrend, you look for weak secondary trends. You look for very weak consolidations, and then you can time your trend following entries with breakouts, for example. So here the market was in a downtrend coming into this trend line, then the downtrend here temporarily paused, but the pause was not very strong. The pause was very weak. The market did not really were able to move higher. So although the market paused, the bulls never really took over, and the bears immediately then made sure that the trend line was broken and the downtrend was continued. Then the market made lower highs and lower lows again until this point where the market paused once again. We cannot really see a bullish attempt to turn the price over. We do see two large bullish candles, but never was there a follow through. The market always kept making lower highs, and at this point the market always stayed below this resistance level, which is an important tell, because although the market tried to push higher and higher, this resistance level was never broken, and we don't even see a failed breakout. So there was not even, or the bulls were not even as or strong enough to push the price higher, even if it would have only been for a failed breakout. So still a lot of bearish pressure in here. Then we have the continuation, we come back into the resistance, but again, the buyers never really were strong enough. We make another consolidation here, a very weak consolidation like here, a very weak consolidation like here. The market is making lower highs. It's still making slowly lower lows, but it's at no point is it really looking very bullish. And although I don't recommend trading consolidations, once you're able to spot such a consolidation, you can wait for the breakout and then try to time your trades. And looking for weak secondary trends, looking for very weak consolidations in an overall longer term trend may be a very, very good option for your trading arsenal. Trend structure change, I can't stress this enough. This is really a valuable skill to have. It sounds often very basic, but actually once you understand how to put the pieces together and how to look at trend structure, it will help your trading a lot. So at the simplest form, we start here on the left. We see that the market is making lower lows and lower highs. Here's the low. Then the market makes a lower high. We make a lower low. And then something here is really changing in the market. Suddenly, after this point here, the market is not even able to come close. It's not able to come close at all to the previous low, which should show us and which should tell us that suddenly something is really, really different here. The sellers are not strong enough. Usually the sellers are able to easily push the price lower, but they're certainly not able to do this here, and they're certainly not able to do this here. And by this point, especially by the second or by the third arrow here, the second arrow going up, you'll see that the market is making significantly higher lows, and there are no more bearish trend waves at all anymore in the market. So it shows us that something is really changing here. No more bears in the market. The bulls are completely taking over, and then you can see this is the starting point of a strong uptrend. So looking at trend waves, how do highs and lows form, is really, really a big help in your overall price action trading. Here we have a failed bull reversal and a fake out. So again, the market overall is in a downtrending market. So the market was clearly in a downtrend. And then here at this point, the market did try to roll over. It did try to make a bullish trend, but the bulls are not strong enough. The bulls ran out of power here at this previous high. So we have a double top, we have a failed breakout. The market tried to push higher during the duration of the candle, but the price action was rejected. The market closed below the level, and then we can see again acceleration, deceleration, and acceleration away from the level. Very, very classic signal. It shows us that, yeah, okay, maybe there were a bullish attempt here. Maybe the bulls for a short period of time had the majority, but the bears took over. At this point, the price was high enough that the bears are interested once again. And then the downtrend here continued after this failed breakout, the fake out, and the bull reversal. So really, really interesting to put all those pieces together to form a very sophisticated trading idea. Although we are just using a few points here and there, a few concepts, you can already see the power of this price action approach. And this is something that, just a little reminder, we did this in the past with another example. Now I'm using a long-term moving average here, and you can see the price was always trading below the moving average, so we are in a long-term downtrend. And during a long-term downtrend, we then look for consolidations. We try to find weak consolidations because they show us, although the opposite side of the market participants, in this case the bulls, are somewhat trying to get in, there are not a lot of bulls in the market and the sellers immediately take over. We have a weak trend line here. The market is never really able to pull higher. And then on the breakout, the market or the trend continues. Another very weak consolidation. The breakout then initiates the new trending leg. Here again, break and retest, and the trend continues. So what I would recommend, if this is something that you are interested in, take a long-term moving average to your charts and then wait for weak consolidations. Try to see if you can draw trend lines, maybe a support and resistance level in there, and then wait for a breakout, wait for a pullback. And this may be a very, very valuable trading approach. But I also really love the concept of deceleration and acceleration. I can't really recommend this trading approach enough. It's really, even if you don't trade it directly, the concepts that are behind this approach are just so interesting. And you can see when we follow this uptrend, there was a huge, strong uptrend, only bullish candles here all the way until the market reached here, this area. Suddenly we have bearish candles, first single bearish candles, then multiple bearish candles, and then the market even failed to break higher. So at this point, the market did try to break out, but the next time there was a really large bearish candle. And then you can see the bullish candles get smaller, smaller, and smaller, and the bearish candles become larger. And then you can see we have acceleration, we have deceleration, and then acceleration again away from the level. So this is what often happens. It really pays off to know about those little concepts because it will happen all the time. The breakout buildup, I made videos about this in the past. It's also part of one of the setups that we trade in the masterclass. The link for that is in the description below the video. And the buildup is really a nice add-on to any pattern. So the market was in an uptrend. The uptrend here was over. The market tried to roll over. The market made this little consolidation. And within this consolidation, you have the buildup. The buildup shows you lower highs. The buildup means that the market is not able to pull away from the level. So the market every time comes back into the level quicker and quicker. We have here rejections at the high. We have a bearish, not a pin bar, but close enough. And then the next one is another pin bar. And then suddenly the market really collapses. The bulls completely withdraw. They see they have no chance. And then the bears here completely take over, initiate a strong breakout, and then this new uptrending leg. So breakouts and buildups are really, really important. Go to my YouTube channel and make sure to search for the buildup pattern. Or if you want to learn more, go to my masterclass through the link in the description below. Momentum rollover. Let's conclude this price action study with a momentum rollover. And we can see this time and time and time again. Strong uptrend, something changes here. Here was the last high point. The market tried to make a huge breakout here with this strong bullish candle. Without the benefit of hindsight, this probably will have looked like now the market is ready to resume the uptrend and move higher. But the next candle immediately was a strong bearish candle. And just looking left after this strong bearish candle, there was no time in this chart context where the price action was that bearish. So after this huge breakout, which should have been a momentum breakout, the market immediately reversed and went lower. So clearly this is not looking bullish anymore. And then afterwards, this marks the highest high. Afterwards, the market really turned around, and it only made lower highs until the market broke out with this fake breakout, with this huge pin bar, this huge rejection, and then the market really plummeted lower. So again, we can see so many little nuances by looking at price action, candle size, and the context that this is really worth it. Make sure to use those concepts in your trading. Let me know in the comments below how you like this video. If you want to learn more about individual concepts, please make sure to subscribe, leave a thumbs up, and until the next time, happy trading.